We're at one of the top mining conferences in the world today. Joining us is Frank Holmes, CEO of U.S. Global Investors here at the BMO Metals and Mining Conference. Frank, good to see you.
It's great to be here, and it is the #1 global mining conference of the world.
Okay, so let's talk about, the sentiment here at the conference. We have a lot of mining companies, a lot of mining stocks to choose from. So let me ask you as an investor, what do you look for? What differentiates one stock over another? What makes one successful over another?
In all our regressional studies, cash flow return on invested capital is the single most important factor, and consistent cash flow return on invested capital. So if I had 100 stocks, how are they doing? Who's in the top half most often? Those stocks outperform.
So if you had to choose one single criteria.
Yes, but it's not 100% of the time, but it captures the importance of good management.
All right, let's talk about the sentiment that you're feeling here. Is there more optimism compared to, let's say, a year ago?
Well, absolutely. When other financings have been done, there was most of the banks coming back. They had to own the deal themselves, and they lost money. Franco-Nevada, they had to expand the issue. It goes to $900 million. It's oversubscribed, and the stock trades up above the issue price. Big win for the bankers, big win for the investors, and Canadian institutions were way underinvested, and they had to scramble to get their allocation towards being weighted properly in gold.
Let's talk gold price now. We're up about 15% on the year here. Can this rally hold? That's the #1 question. Does it have legs? What does Frank Holmes say?
I talked about it last week. 50 crossed above the 200-day moving average. The golden cross is in place. Mathematically, the odds are in your favor of a more sustainable run. Short term, it's way overbought. It could have a healthy correction. But what's different, Daniela, from a year ago?
Yeah.
Gold goes through this seasonal pattern. It rallies until the Chinese New Year and then falls off to the summer. And whenever it basically has strong legs like we have today, it's because of real interest rates. A year ago they were positive. Today they are negative. That CPI number that came out last week basically said owning government bonds is a bad deal, and it gives great sustainable support to gold.
Frank, are you concerned, because usually people get very excited when we have a gold rally? Do you think, and last time miners made the mistake of increasing their costs and margins, do you think we might see this again this time around?
Oh yes, I think boards are much stronger in the allocation of capital, technical people. I think there's many more qualified technical people looking for jobs. I think a lot of projects are going to be basically still put on the shelf until much higher gold prices.
All right, touchdown pass this week. Frank, what are you eyeing? What's it going to be? Jobs?
I always look at that PMI. Purchasing Manufacturers Index is looking forward, and I think it's in a negative trend still.
Frank, always good to see you on the road. Thanks so much for stopping by.
It's great to be here.
And thanks for watching our coverage here from the BMO Metals and Mining Conference. We'll have more for you the next few days, so be sure to stay tuned to Kitco.com. Thanks for watching. Frank, thank you so much. No, it was great. Fantastic.